Start பண்ணிடலாம். Yes.
Sir, வணக்கம் சார்.
சார் வணக்கம். வணக்கம். வெல்கம் சார்.
Good evening.
Yes. Yes.
Good evening, sir.
Good evening, sir. Good evening, sir. Raghunath sir. Good evening, sir. Shamu sir. Good evening, sir.
Very good evening, sir.
Good evening, sir. Thanks, sir.
Sir, we will start in another 2 minutes, sir.
Yes, sir. Yes, sir.
2 minutes.
Good evening, sir.
Good evening, sir. Sir, good
Sir,
evening.
good evening, sir.
Sir, good evening.
Yes.
Yes,
Sir is on travel from Salem. So, sir, we will start in 2 minutes, sir.
No problem. I am ready.
Yes, sir.
Start.
Hi, everyone. A very good evening to each one of you over here. It is extremely a pleasure to welcome each of you to this very special webinar, the 59th webinar of Zen Tax Talks, where we present to you the 14th edition of Effects on You, the Union Budget 2025. So the Union Budget is a very important event in the history of the country as a whole, and it spans out the entire activities for the country for the next 1 year, and also the vision for the financial future of the country for the next decades to come. So in this regard, this Union Budget 2025 has been a very epic moment, and to discuss about the nuances of the Union Budget and also the finance bill, we have here with us an expert panel of speakers lining up from Mr. D. Shanmugha Sundaram, Mr. N. Rangaraj sir is over here with us. Dr. K.S. Ravichandran sir, practicing company secretary sir, he is here with us, and we also have Mr. Samir Narang from the ICICI team. So here we have an expert panel to deliberate over here in depth, and to welcome the gathering, we have our mentor and chief advisor, CAP Paul Thangam, who will welcome us all to this great beginning.
Good evening to all. First, for the expert panelist, our sincere thanks from Zentax Clinic and Paul Arandaran for accepting our invitation. It is a erudite team which will be giving the details of the budget that was presented by the finance minister today. See, everyone has got that expertise. We chose a team which consisted of Samir Narang from banking side, then from CFO side, Sri Rangarajan sir, then from professional side, we have got KSR sir, then Shanmugha Sundaram sir. The most important, that is from the industry point. So the budget is mainly about the growth for the industry and then for the trade and everything. So that is the backbone. From that only the budget is coming up. So agriculture contribution and everything comes from that industry side. So we have all the eminent panelists who will be able to deliberate on this. They will be able to give their views on the budget, and then that will be useful for all the members who are taking part. Okay, every time we used to present a brochure, effects on you, heard and then not heard in the budget. So why we meant heard and then not heard? Because in the budget, there are some things because she is reading only from the what is prepared, and then some essential things only she is speaking. But the most important content is with regard to the finance bill. So the finance bill, that only contains, and also only selected portions or whichever is appealing to the majority is only taken. But there are amendments that will be having a far-reaching effect on the people, but that is not discussed in detail. So that only we named as usual effects on you, heard and then not heard in the budget. For example, with regard to indirect taxes on CGST, not even a word was talked, but there are so many amendments in CGST Act also. So these are all the issues. And then first we will have an overall view about the budget. I welcome all the participants to this webinar and also our panelists, the experts who have accepted our kind invitation. Sir, thanks to all of you for the hands. Thanks, sir. Thanks. We are expecting your views on budget, sir. Yes, sir. Yes, sir.
So to begin the session, we will have the thoughts from Mr. D. Shanmugha Sundaram, Chairman, CII E-Road Zone. So Mr. D. Shanmugha Sundaram sir has been the chairman of Young Indians of the E-Road Zone during the year 2015, and he currently heads to be the chairman of the CII E-Road Zone. He has been on the state agricultural panel of CII during the year 2017-18. He is a person who has done his master's from USA. He is interested in agriculture and he also heads the group's agriculture activities. He takes care of the IT, finance, administration and HR department of CD's group, which has an annual turnover of rupees 25 crores. So he has returned to India in the year 1998, and he has been heading the production and marketing for the major brand Refined Oil and Kamadhenu brand Vanaspati. So they have built an in-house ERP, and that has now been focusing mainly on hospital management solutions. He also takes care of an Indian oil retail outlet. He is into organic farming, cultivating traditional varieties of rice. Currently, they cultivate 14 varieties of traditional rice, process and market the same directly to consumers. So here we have a person who has been from the entrepreneurial background and also very much interested in the backbone of the India's economy, which is into agriculture. We cannot have a better person to start our budget session on the effects on you, heard and not heard. So over to you, Shanmugha Sundaram sir.
Thank you very much, sir. Thank you for having me on this panel to discuss on the herds and not herds of the current budget. It is overall, I think, as far as the MSMEs are concerned, this is really a good budget. It is really heartening to see the changes that have been brought in this current budget. Typically, to say one of the most important things, micro and small enterprises categorization வந்துட்டு investmentsல வந்துட்டு we were supposed to have about 1 crore, up to 1 crore investment was considered to be micro, and up to 5 crores turnover was considered to be micro. Now they have changed it. They have increased it up to 2.5 crores of investment and up to 10 crores of turnover. Industries are considered to be micro, which is a very good sign. And adhe mari small enterprises வந்துட்டு earlier it was 10 crore investment and 50 crore turnover. Now it has been changed to 25 crores of investment and 100 crores of turnover. And medium enterprises, earlier it was 50 crores of investment and 250 crores of turnover. Now it is 125 crores of investment and 500 crores of turnover. So இந்த இதோட just to the classifications மட்டுமே நமக்கு என்ன ஒரு பெரிய பெனிஃபிட்னா, earlier industries that were considered to be small or medium now they will be revised one step lower. Most of them who are on the borderlines in the mari irukavanga vandu will go one step lower so they can avail more of the benefits that are extended to the MSME sectors. Vandute like industries that were earlier not in this MSME classification because of their turnover or investment levels. In terms of trades, in the mari idla vandute they stand to benefit because they will get classified as MSMEs, and adnala avangalukku cash flows in the mari aspects liyum there will be a good hand support, hand holding. I mean ஒரு நல்ல சப்போர்ட்டா இருக்கும்னு நினைக்கிறேன் because of the trades platform. அடுத்து வந்து in terms of they have also classified in the focus, there is focus on footwear and leather sectors. Scheme is expected to facilitate employment of about 22 lakh persons, generate a turnover of about 4 lakh crores and exports of over 1.1 lakh crores. And measures for toy sectors, again on the side they have set it as one of the focus sectors to focus on development of clusters, skills and a manufacturing ecosystem that will create high quality, unique, innovative and sustainable toys to represent the Made in India brand. So அதுலயும் ஒரு focus கொடுத்திருக்காங்க. அதே மாதிரி support for food processing, அதுல வந்து establishment of the National Food Institute of Food Technology in Bihar, enhanced income for the farmers and skilling, entrepreneurship and employment opportunities for the youth. So this is another thing that the government has brought in as a focus area. அடுத்தது வந்துட்டு in terms of the income tax side, direct taxation side, up to 4 lakhs, they have said that the slabs have been revised, and up to 4 lakhs or 4 lakhs they have given as the zero income tax, and அந்த மாதிரி ஒரு slab இது கொடுத்திருக்காங்க. அதுல major benefit என்னன்னா up to 12 lakhs they give rebate. So 4 lakhs is direct benefit, and then up to 12 lakhs on earnings up to 12 lakhs is considered as zero tax on the income tax fund. So I see this as a very good shot in the arm for MSMEs, and this will go a long way. And also in this CGTMSE scheme earlier the CGTMSE was extended to 5 crores, which has now gone up to 10 crores, and for startups it was earlier 10 crores, which has now gone up to 20 crores. And for any export organization which are exporting, whether even if they don't fall under the MSME, they also get 20 crores varaikkum CGTMSE extend பண்ணிருக்காங்க. These are the key benefits that I see for MSMEs in the current budget.
Yes, sir. Thank you, sir. Thank you, sir, for sharing your insights. Definitely, there has been a lot of benefit for the MSME sector, and particularly when we decided the topic with respect to MSMEs, we were not really sure about how much benefit would be actually given to MSMEs. But having seen that the budget has primarily concentrated on MSMEs concerning the business segment, and also that is to expand the threshold criteria of who will be covered under a micro enterprise, a small enterprise, and also a medium enterprise. So the benefit was not only restricted to the micro and the small segment, but was also enhanced to the medium segment. So all three segments have been greatly benefited. There has been one of our very good clients who remarked to say, so anyways, for the next 5 years, I would still continue to be an MSME. So there is a thrill for a business entrepreneur or a financial person, a finance professional, to be covered under the benefits of MSME because of the various direct and the very indirect benefit that comes out of the finance, the direct tax related provisions, and also from the indirect means like rate reduction from the various banks. So definitely the benefits of being an MSME have been a thrill to the entire business community, because as the finance minister also rightly remarked during the course of the budget speech, a phenomenal contribution, more than 50% of the contribution comes from the MSME sector. And now going forward, I am sure that it is going to be enhanced to say 75 to 80% of the entire product and service community is going to be coming from the MSME sector with this proposed amendment. So thank you, sir, for your highlights. And next we have Mr. N. Rangaraj, sir, CFO, LG Balakrishnan Brothers, a finance professional himself, a chartered accountant and an MBA graduate. He has been working in the amalgamation group of companies for a brief period of 3 years, and he has been working very closely with LG Balakrishnan Brothers company, listed entity, since 2004. Having been with the group and listed company for the last period of 21 years, he comes here to throw some perspectives from the corporate background on how this Union Budget 2025 impacts or benefits a corporate. So over to you, sir, for your insights, please.
Thank you, Aravind, for the introduction. Good evening to all the participants. So the topic given to me was corporate financial strategy and the growth outlook. As a corporate, already the first speaker has hinted about the benefits which the budget gives to MSMEs. We doesn't fall under MSME, but we all along been supporting MSMEs. And in fact, we always welcome the MSMEs as our suppliers. And now, based on the increase in the categorization of the MSME, the investment limit, and the increase in the turnover, will bring in a lot of medium scale industry into the fold of small industry. So where this micro and small industry used to get the benefit of payment within 45 days, somehow they have left out this medium industry for this fold of payment within 45 days. But right now, definitely, many of the industries which was under the fold of medium will move to small, and they will get the benefit of getting the payment on time. So that is the biggest benefit which, as an outlook, we are seeing from our corporate side. And the second thing need to be noted on the MSME side is the credit limit, which was increased by the government. So that will also induce their growth. So from the corporate side, we see these two as the important growth provider for MSMEs. Definitely, as said by the speaker and the finance minister, MSMEs are the backbones of the industrial growth. We are a part of that. So we also encourage adding more MSMEs into our fold as a suppliers. So that is the first part on the budget, so which benefits MSME. Second part, if you look at the thing, more trust was given on agri. So whenever more trust is given to agri, automatically the rural economy grow. So whenever there is a growth in the rural economy, definitely it will overall increase the growth rate of all the industries, since the individual income increases and thereby the spending is there and the growth is triggered. But in my perspective, what I think is the main reason to give or to increase the exemption limit from 7 lakhs to 12 lakhs, maybe because the government might have thought of allowing the people to spend more, thereby the growth can be triggered. That is the one way of looking at this exemption limit, which got increased from 7 to 12 lakhs. And as an automotive industry, we see the thrust in agriculture, which gives indirectly the rural growth, so which in turn will increase the growth of the automotive industry. Before the budget, we were having discussion with the credit rating agency, where they were looking at a growth rate of less than 10% for the two-wheelers and four-wheelers in the coming years. Probably after this budget, the outlook should change. There should be an additional growth which can be expected based on this budget. That is with regard to the industry where we are in. And with respect to the income tax, we were facing a lot of issues in income tax in identifying the specified person and a non-specified person, where we need to deduct higher rate of TDS or non-specified person. Now that thing has gone, and that's a very great relief for all the corporates. So now it's going to be only on the non-PAN holders where we need to deduct higher rate of tax. That's a very great relief for us. And not only for us, but for all the corporates. Because the facility was not there to identify. It's not easy to identify specific person and not specified person. Always we need to go behind every person, asking them whether they have filed the return or not. So that's a very big relief. And as I told, income tax to the individuals, definitely we are very happy to see people getting more benefits, because all along being salaried people doesn't get much of a benefit. Whenever the budget announcement was there, normally we used to expect more benefits. Always we wait and see whether the direct tax announcement will be there. So the first 1 hour will go like that, and then later on we will be very eager to see whether there will be any additional exemption given. For the last so many years we couldn't get, but in the current year it was very good. An increase from 7 lakh to 12 lakhs is a good initiative, and everybody is very happy for that. And the other thing related to export, all the corporates were struggling with respect to the EDPMS, because all along been the bankers were doing or generating the EBRCs and giving to us. Now that job was shifted to the people who are doing the export. We were finding it very difficult to do that because the facilitation was not there. So now I assume that they had given a Bharat net export net facility, which I assume this difficulty will go away. So that is another great relief which we expect to happen. So on the export front. With respect to our own industry, a lot of exemptions were given for the capital goods. Exemption in the sense exemption of custom duty on the capital goods imported for the manufacturing of EV batteries and related to electric vehicle manufacturing. That is going to be another trigger of growth for us. So because we expect both electric vehicle and IC engine related vehicle to grow faster. So this will induce the electric vehicle growth. Even though the government has removed the FAME scheme earlier, now indirectly they have given exemption for the capital goods for manufacturing this battery. So that will trigger the electric vehicle growth. So overall, like as said by the first speaker, the budget is very good and we are very positive on our growth. So great relief on the compliance side also. So we expect to go through the fine prints of the budget so that we will come to understand a lot of things on that. So thanks for the opportunity to Zentex Clinic.
Arvind, I just have another 2 points that I missed out.
Oh,
which
yes,
I
sir.
see for the MSMEs. I'm sorry to bother you.
Please, sir. Please,
Please,
sir.
sir.
One of the government has announced a credit card scheme for micro enterprises, which is customized credit cards with a limit of about 5 lakhs for micro enterprises registered on Udayam portal. In the first year, 10 lakh such cards will be issued. And another scheme they have done is for first-time entrepreneurs, for 5 lakh first-time entrepreneurs, including women and scheduled castes and scheduled tribes. A new scheme to be launched to provide term loans up to 2 crores during the next 5 years. These are two, very important things that go a long way in encouraging micro and small enterprises, especially for first-timers. This is a very good thing, and I think the credit card scheme is a very important thing. It's a shot in the arm for entrepreneurs, so they get a 5 lakh credit limit apart from all the other limits they have. So I think it's a very important and worthwhile to mention it here. Thank you.
Yes, sir. Yes, sir. First, Shanmusunam, sir, we acknowledge, sir. Yes, the credit card scheme, because 5 lakhs into 10 lakh, I don't know how many crores that will come into the economy. So that will be from the banks or some institutions only, that amount will be coming. So mostly the credit cards are unsecured. So huge amount will get pumped into the system. So there will be liquidity in the system. So there will be a drivers for the growth of the economy as a whole. We hope, sir. Then Rangarajan, sir. Yes. You are right, sir. See, though you are a big company also, you spoke entirely in favor of the MSME. Then what are the benefits that will come to MSME? See, only thing is, the first one is the increase in limit will bring in the more funds, because there is a payment criteria. So payment criteria 15 days or 45 days, depending upon whether you got agreement or not. So that will give more amount to the hands of the MSMEs. Those companies who are not in the purview of the MSME, they will be coming into that. So there will be a push to make the payment within the due date. So within the time limit, otherwise the expenditure will get disallowed, all those things. Yeah. So that is a very, very positive amendment. Trust to agriculture. Yes, more trust has been given for agriculture. And growth rate, as you discussed with the rating authorities, growth rate may be 10%. Yeah, that is also very welcome only, sir. Growth rate. Then the TDS, great relief. See, you mentioned about specified and the non-specified. More than that, I would say, see, this is TDS or TCS for the goods. Now they have clarified only TDS. There is no TCS. Now we have to see whether the TCS will come or TDS will come. Sir, that person has collected TCS, sir. Then should I again deduct TDS? All those confusion for the same thing. But there was a circular. Yes, if you there is a tax collection, there need not be TDS, and then that can be used alternatively. Those are the circular was given by the CVDT. But in spite of that thing, see, the practical difficulties were very, very huge. So identifying a person, whether his turnover has cost 10 crores or anything, all those things were creating a lot of problems. And also when we have got a wide base, then it was creating a lot of headache for the department, and also for the, I mean the department means the accounts department, not to the income tax department. Income tax department will send a notice, that's all. So there is a short deduction or short collection. Immediately you file it, the next day you will get a notice. But to that extent, there is a great relief. Then increasing in the rental from 240 to 6 lakhs. Those are all some of the positive aspects that we are, as you rightly pointed out, in the TDS, there is some great relief has come. And also it is for the industry as a whole. And also it is for the small traders or small entrepreneurs or small property owners. This is a big relief. Otherwise, see, up to 6 lakhs, now they increase. See, there was a person who is getting a rental income of 6 lakhs. Prior to that, he has got no other income. Now, there is no TDS deduction. Here there will be TDS deduction. He has to file and then he will be waiting to get the refund. Now all those things are gone. Then EBRC, you will be getting it in a faster manner. So these are all some of the aspects that you highlighted, sir. Then electrical vehicles also, it is gaining popularity. So for your industry, for your side, there may be some issues with regard to this changing over, but there will be change. We have to accept. But you said that in spite of withdrawing all those subsidies, still the demand is there for the industry as such. One more aspect, finance minister stressed is health tourism. Health tourism. So that is a, see that word actually when once when I made a visit to Hyderabad, that was Chandrababu Naidu was, that time he was out of the power. I have to hear him. That time he told, see, I wanted to make Hyderabad as a health tourist spot. So people from Gulf can come and then take the medicines here. So they will be getting benefit because it will be cheaper compared if they are going to Europe or some countries. And then if they come to Hyderabad, there is a straight flight from Gulf, so they can come and then the health tourism will flourish. Yes, sure. Anyone who has taken the health benefits or hospitalized in abroad or anybody will understand how it is cheaper as compared to the abroad treatment. See, for example, waiting period. Now, for appointment in US, getting an appointment and then waiting, instead of that, if they can come. We have seen so many persons taking the even the dental treatment when they come here, they keep it pending. So that is one of the areas stressed by the finance minister. So why I am saying is Coimbatore or our place, we got so many hospitals, big hospital, PAG is there, Ramashna, Ganga, all those specialist hospitals are there. So that will also be a medical tourism, as pointed out by the finance minister, will be coming in the future years. That will also, see, whenever that medical tourism comes, there is going to be an inflow of the foreign funds. That also will be benefit to the Indian economy as a whole. So thank you, sir, for your excellent speech about the budget, giving the practical advantages of the budget. And then it was very, very nice. Thanks you, sir. Thank you, Rangarajan, sir.
Thank you. Thank you.
Sir. Yes.
So thank you, Rangaraj, sir. So next we have Dr. K.S. Ravichandran, founder and managing partner of KSR and Company Secretaries. So a professional, a person who has been in the Indian Air Force for more than 9 years as a specialist in Russian radar systems, a doctorate from the from the Alagappa University on prosecution of directors under the company law and the criminal law in India and UK, an active speaker who is just now returning from a speech from Salem. He has addressed several conferences, seminars, and written more than 1,000 articles on corporate laws. An author who has authored multiple books, including a treatise on contraventions under the Companies Act, Securities Laws, and FEMA in 2021, a book on CSR in 2016, a book related to LLP in 2010, a book on corporate lending charges, debt recovery, enforcement of security interest, and winding up of companies in 2006. So he has been a lecturer at Jawaharlal Nehru College. He was an independent director in Karur Vysya Bank for a period of 8 years, and he now chairs the Corporate Laws Council of Associates Southern Regional Council. No better person to discuss on the ease of doing business, and also particularly from the company law perspective on what have been the recent changes, not just from the union budget, but also outside the union budget. Sir, over to you, please.
Am I audible, sir?
Yes, sir, you are audible,
Yes,
sir.
Back to office, sir.
Am I audible?
Yes, sir.
Yes, sir, you are audible, sir.
Audible,
Okay, sir. Because whatever you spoke, I didn't hear.
Sir.
Very interesting part of the budget I liked was வானோக்கி வாழும் உலகெல்லாம் மன்னவன் கோல் நோக்கி வாழும் குடி அப்படின்னு ஒரு திருக்குறள்ல ஒரு கவர்னன்ஸ் பத்தி ஒரு பேராகிராஃப் இருந்துச்சு. எப்படி மக்கள் மழையை எதிர்பார்த்து இருக்கிறார்களோ அப்படின்னு. I feel I was happy to say because it is about my subject and that is broadly the governance area. And also very interestingly, you have used the words heard and unheard. That is very interesting actually in the whole session. I will take you to briefly to the regulatory aspects of the entire thing. You would have certainly noticed for a long time there has been a demand for increasing the FDI, foreign direct investment, in the insurance sector. The reason is that compared to the population in India and compared to the population in UK, USA, and several other countries, the penetration of insurance is yet to take place to the desired level. Number two, India being a highly populated country, there was a need for FDI to come. Today, up to 74% FDI also, they have to have a tie-up with a local player. And the regulatory environment is, I will say, rough and tough. I'm using the language in the same language, rough and tough. You would have heard about the HDFC Standard Life, Max Life proposal of merger. At the end of the day, did not see the light of the day because there was a complicated merger structure, and under Section 35 of the Insurance Act, the regulatory authority, that is IRDAI, refused to grant the prior permission for the merger. 100% foreign direct investment will give the level playing field between foreign operators and the Indian operators. It will also improve the competitiveness. It may bring technology and innovation into the insurance sector, and therefore it can ultimately benefit the consumers, in my opinion. Secondly, you will also have to see the EODB is always going to increase whenever we have global players accommodated into the scheme of things. So I personally believe there could be greater amount of regulatory EODB in the insurance sector, which is a fallout of, which is likely to be a fallout of the proposal to increase and allow the FDI up to 100%. And take it from me, we are looking at for huge increase in the M&A activity in this sector, consequent upon 100% FDI being allowed. So there will be significant M&A activity, there will be significant divorce between, see, I'm using the language mergers and divorce together. Significant M&A activity. At the same time, there could be significant divorce between insurance operators in the segment like life and general separate and other sectors. There could be a consolidated holding company operating hospital on one vertical and insurance on another vertical. But there will be definitely a tight Chinese wall between these two. Therefore, I welcome the move to allow up to 100% FDI in the insurance sector. The other part of the regulatory reforms which we are likely to see is decriminalization. We are aware under the Companies Act, under the tax laws, under the several other laws, decriminalization has been security laws, Foreign Exchange Management Act, even FCRA. You know, decriminalization has been the norm because over a period, I can say 2006 Shriram Supreme Court in Shriram case, because decriminalization penalty is issued. That is the point. There is no question of congesting the congestion in the ordinary criminal courts for economic offences and the files gathering dust there for decades. You would have also probably heard about the Johnson & Johnson in the USA on the 1st June 2021, paying a penalty, monetary penalty of $2.5 billion, $2.5 billion, and filing a report to the Securities Exchange Commission. For the corporate sector, monetary penalty regime as against a criminal prosecution involving fines and imprisonment through the ordinary criminal justice system, what is currently known as the BNS, is a welcome move because it's a way of EOD. Of course, on the sidelines, I will add this point also that in US, latest reports is that J&J is in one of its subsidiaries or something, there is a bankruptcy filing and the amount of penalty has increased to $9 billion. So, generally, decriminalization is a welcome step. The provision called Jan Viswas 2.0 thinks about hundreds of provisions to be brought into. My friends have already talked about MSME. They have already explained about the increase in the threshold for plant and machinery investment as well as for the turnover. We have always been telling that the higher the turnover, there will be the inclusion of larger enterprises into the scheme of things. And this is likely to invigorate M&A activity within the MSME sector. See, you must take the ecosystem as a whole. Look at the complete scenario, and you see on the one hand, you have funding facilities. You have credit that is going to be given with guarantee proposals, and the credit limits have increased. There is an increased integration of startups and MSME. There is going to be capital flow because of the SME listing. And thereby, what happens is within the sector, there is going to be a governance culture completely improved. There is going to be capital infusion thoroughly happening. There is going to be M&A activity, which is going to be found in MSME sector itself through these processes, a combination of these. And that is one point. Of course, I always have a reservation. Should we increase the turnover limit to a such level like 500 crore? And whereby, as my friend Arvind Kanga was saying, maybe more than 2/3 of the GDP will be contributed, or even more than that will be contributed through the MSME sector, given the way it goes. The other point is, if you look at the 25% corporate tax, the turnover limit is 400 crore, if my memory is correct. So there is a slight disintegration, which can also be looked at. There is always an increased demand across the industry that there shall be a separation between medium enterprises and small and micro enterprises. Because medium enterprises, 250 crore itself is considered as a very high, big elephant amongst the small and micro enterprises. Now it is going to be 500 crore. So that is an aspect which we have to remember. But this is going to help because the investment that is required for innovation, the investment that is required for technological productivity advancements, AI tools, automations, process automation, machine automation. I think therefore there is a need for introducing this 1:4, that is investment to turnover, into the scheme of things. And a lot of thought process would have gone into, is my opinion, in terms of the MSME. And please note the other point under the Insolvency Bankruptcy Code, 29-day relaxation for MSME, and the pre-packaged insolvency resolution process, PPIRP. These are all available for MSME. And therefore, there is going to be a better benefit for even ailing enterprises in the scheme of things because of the proposal to, significantly increase the threshold for investment as well as turnover. The third part of it, the fourth part of it, the first one I addressed on FDI, second one on decriminalization, third one on the MSME sector, and the fourth one we need to look at is the startup extension of incorporation by 5 more years up to 1/4/2030. So that is a very welcome step because of the Startup India program and the success relating to startups in our country. Credit availability, particularly, especially for startups, they have given 10 crore to 20 crore, and well-run MSME export units will get term loans up to 20 crore. I think these are all good steps. And apart from these 4 important things, there is also 2 more subjects. I thought 3 more subjects I will tell you. There is going to be a high-level committee for regulatory reforms in the non-financial sector. You must be already aware that in the financial sector, BFSI sector, there is a lot of regulatory actions taking place every day. The Reserve Bank of India, the SEBI, the insurance regulator, and all. With that, there is a lot of classification, there is a lot of governance measures, layered classes and all. In the non-financial sector also, we are going to see EODB through the constitution of a high-level committee for the review of reforms. Presently, I am on the board, I am a member of the SEBI appointed expert committee to lay down industrial standards framework for disclosures relating to related party transactions. I had a meeting in the group with SEBI chair and all the top leaders. And I'm also happy to tell that I'm the only company secretary in the whole of the country, PCS, to be a member of the expert group. But the point is that there is a whole lot of activity, synchronization taking place towards improvement of the governance so that liberalization could be done, so that EODB is possible. As a thought process, they want to increase it, cut down the compliance burden, cost of compliance, improve the EODB. Ease of doing business must improve, cost of compliances must come down, trust must be increased on self-regulations. And that is the point which is going to be the driver for this high-level committee to bring about regulatory reforms in the non-financial sector. There are only two more things which are, of course, we can't call it as regulatory, but definitely they are provisions. You would have seen the shipping companies have the tonnage schemes. There is going to be, relaxed, reduced, I can say, the taxes for the tonnage. And in view of this government's, particularly this government's, special focus on increasing the inland waterways and the cargo movement through ships and passenger vessels. And you would have also probably heard about the Director General of Shipping in February 2023 issued an order in order to remove the old ships, whether it is oil tankers, whether it is cargo, whether it is specialized cargo or whatever it is, up to 25 years, if the ship is of age, I don't think they are going to be permitted even to carry the Indian flag. That is a regulation 24 February 2023 by DG Shipping. Therefore, there is going to be an increased activity allowing inland water to compete with ocean-going vessels or sea-going vessels. It's a very interesting phenomena I read. The yet another, last but not the least, is the agriculture-related one, where this budget speech contains special programs for augmenting the hybrid and seed, germplasm and all. I have been working with some of our clients on this activity. I found, in fact, I was told by one agricultural scientist that there is, if we are able to bring a 25% increase in the fortified peanuts, that is likely to involve, to my knowledge, it will require a capex of 1,200 to 1,500 crores. And that is going to be bringing a much great revolution in terms of groundnut oil because, India's export to EU in this segment is hardly 1%, whereas some countries like Argentina is doing 100% export. So therefore, it requires our country look at hybrid and fortified seed production because UNDP estimates that our population in 2062 is going to be 175 crores. And 100 crore will be a dependent population, about 100 crore, 90 crore or something will be a dependent population with a life expectancy beyond 80, senior citizens, super senior citizens, and very kids and children. So there will be a huge burden, and therefore there is a lot of trust on this kind of productivity enhancement, be it technology, be it agriculture, be it the need for skilling and reskilling. This budget provides a direction for that. Thank you, Zenitax, for this opportunity. I have shared some of my thoughts. Thank you.
Thank you, sir. Yes, as you are a doctor, okay, but you presented like a professional medical doctor because you were lost, but not you.
Actually, you are not audible for me.
Oh,
Okay, sir.
Still, I managed to speak.
oh, okay, sir. You are audible, sir. You are well audible, sir.
Yes,
So, thank you for your kind words.
Okay, sir. But doesn't matter, sir, because we wanted to hear you only, sir. So your words are very kind. So it is not problem that you did not hear what we talk, sir. Okay, your words were very nice. Okay, as you mentioned, that is insurance, 100% in insurance sector. Yes, that is going to be the order of the day, and also it will bring competition between the insurance companies in India and also from the overseas players. See, for example, that is whenever, see, first time when the economy was opened by our late Prime Minister Narasimha Rao, there are so many apprehensions, but at last it proved to be better, and then better for the consumer as such. From the product side, I would say, see, prior to that, we were using only some scooters, Bajaj or something, but we were having a waiting period for 4 years or something. But after that, so many players came, and then the entire market was changed. The entire system was changed. When the Kinetic Honda introduced the gearless scooter, we were laughing at it as a toy scooter. But in the long run, it proved that it is efficiency. Just like that in automobile sector also, previously we were having Ambassador and then Fiat, the same old pattern, only some minor changes in the dashboard. Other than that, there will not be. So similarly, as you said, in the insurance sector, if the introduction of 100%, there will be benefits in the future, sir. M&A mergers and acquisitions will happen, as you mentioned, due to increase in the limit for MSME. There could be mergers and acquisitions within the MSME sector. Now the mergers and acquisitions are taking place at the larger area, but within the sector, there could be some mergers and acquisitions will be happening. So that is also one positive aspect of the budget. Decriminalization, yes, it is a need of the hour. So decriminalization is required even for small acts. Some arrest warrants are giving issued. So that is what to say, Damocles sword over the heads of the entrepreneurs. So that will go away. So that is very, very important, sir. Then IBC benefits, as you highlighted, it is also for the MSME sector. That is also very, very useful. And happy to note that you are part of a regulatory for non-financial sector advisory committee, and it is sure some sort of governance is required for non-financial sector. As for financial sectors, we have got the RBI, SEBI, and various agencies are there. Now there is no regulation for non-financial sector. There also some control and then regulatory mechanism come. It will be for the betterment of the total economy as a whole. So thanks, thank you for attending here, coming from the way, and then immediately sharing your thoughts in our webinar. It is a great honor for us, sir. Thank you, sir. Thank you, sir.
So next we have Mr. Samir Narang, who heads the Economic Research Group at ICICI Bank. So the Economic Research Group at ICICI Bank looks at the global and domestic themes impacting the world and decipher the impact of the same on businesses and countries. The group works on understanding how growth, inflation, monetary and fiscal policies will influence markets and different asset classes. He has more than 20 years of experience in macroeconomics and investment research, spanning both public and private sector. Samir Narang regularly interacts with corporates, industry bodies, policymakers on key economic issues, and today he is here to interact with us at this Zen Tax Talk session on the 14th edition of Effects on You. So all the way from Mumbai, we have Mr. Samir Narang, a graduate of Delhi School of Engineering and an MBA graduate from Indian School of Business, Hyderabad. Over to you, sir. It's a pleasure having you. Over to you for your thoughts on the budget 2025.
Thank you, sir.
Thank you so much. Thank you so much for giving us the opportunity. In terms of the budget, I would keep it brief. I think a lot has been discussed. What I would like to say is that the budget numbers are very conservative and credible. I think it's already discussed. There's a large boost that has come to urban consumption. Notably, urban consumption has been weak of late, and the budget actually delivered on it by incentivizing it through lower tax incidence of lower taxation for middle class and income tax filers in the country. Notably, this segment was showing a lot more reduction in consumption over the last few months and quarters. So this rightly so should incentivize consumption going forward. And if you look at the budget arithmetic, it actually takes all of this into account. Personal income tax are expected to grow at around 14% compared to 20% this year. Same time, corporate taxes are expected to pick up because of pickup in urban consumption. Same is the case with GST, which is likely to pick up because of higher urban consumption. So overall, nominal GDP growth of 10% and overall tax collection is also similar around that number. So overall tax buoyancy is pretty much in line with nominal GDP growth, which in itself is very conservative at 10%. So numbers are very achievable. At the same the fiscal conservatism has continued. Only 7% increase in overall spending, led by a less than 7% increase in revenue, and capex is projected to increase by 10%. Capex is a little bit underwhelming, but I think everything cannot be achieved in the budget. So it has given a boost to consumption, and capex likely to increase by 10% this year. And next year, but I think the budget has opened up room for higher capital spending because the anchor has moved from fiscal deficit to debt to GDP. So that gives room for budget to start spending next year on the capital spending front. At the same time, the budget is also incentivizing states to spend by giving more grants and aid for capital formation. So all of that put together implies very sensible orientation in terms of incentivizing the right pockets where there is a slowdown because states have not been spending. So the center is giving incentive over there as well. Overall, this number is positive for the bond market because net market borrowings are pretty much in line with last year. Gross are a little bit higher, but that can be again brought down if RBI decides to switch some of the securities owns for the government of India. So overall, we believe, these numbers on the fiscal front, they give room for optimism in terms of fiscal consolidation, which has continued. The anchor wing gives a glide path in terms of debt to GDP by 2031 to be brought down to around 50%. That's also set the base for a rating upgrade for the country in the next few, years. And perhaps this or next year, one of the rating agencies may be in a position to do a rating upgrade given the fiscal conservatism the government has shown from a high of 9% of GDP to 4.4% this year. And each year the government has been doing well, what has been saying. So overall, in that light, we believe it also opens room for monetary policy easing going forward. And it implies that the government and the RBI are working together now going forward, and sets the case for RBI to do a rate cut as well as soon as the February policy, followed by another rate cut in April. So our view is a 50 basis points rate cut is very likely, and RBI will be in a position to do this because that any amount of increase that is likely to happen in terms of depreciation bias of the currency should not pass through into the economy. So core inflation and overall inflation in the country remains low, and that sets the room for easing. So overall, good budget in terms of macro potential stability, macroeconomic stability to act, and also ensures lower interest rates both for the government as well as for all the consumers in the country. And it also ensures that we are in a position to grow not only in the near term because of stimulus to urban consumption, but over the medium term as well, as the anchor has moved and the government will have room to spend going forward, both on capital spending and thus driving medium-term growth closer to 7% than the 6.5% that we have projected for FY26. Gradually, growth should pick up as demand improves, as well as interest rates come down. And over the medium term, the government will be in a position to spend on capex because of the movement of the anchor. So overall, we believe this sets the tone for much lower, interest rates and much higher growth, improving India's potential growth over the next a couple of years through higher capex spending, both by the center and the states, and higher demand leading to higher capacity utilization, which implies, pickup in private investment as well. Any questions if you have, or on anything specific, I would like to do that. But these are the general remarks in terms of the budget. So yeah.
Yes. Thank you, Sami sir. Thank you. Yeah, as you mentioned, surely the liquidity will add to the capex, and also you are confident that there will be rate cut in the April. That is
Yes.
a that's a very positive news. And also the growth. It is not only in the short term, even in the medium term. You told that there is going to be a growth pattern. That is also very much needed, sir, at this point of time. The economy should be in running in a positive word. So these are all some of the positive aspects that you highlighted, sir. And we are thankful for your presence and then for your nice words, sir. We were happy to hear you.
Thank you so
Thank you for being part of Zentax, sir. Thank you, sir.
Thank you so much. Thank you.
Thank you, sir. So from an economical perspective, we have heard, from an entrepreneurial perspective, we have heard, from a professional perspective on ease of doing business, and also equally from a corporate perspective. Now comes to the key aspects of the budget, that is very similar to how the part B of the finance minister's speech is all set like. So we are here set to hear about the changes in the taxation proposals, both in the direct and indirect tax proposals. So to the interest of the audience, we will start with the direct tax proposals. And as I share my screen for the benefit of all, you may please let me know if my screen is visible. You may just put up a thumbs up here, right? So is my screen visible? So I have shared my screen over here. So is my screen visible, right? So this has been a webinar organized by Team Zentax Clinic. Phenomenal efforts have gone in to make this happen a reality, because the budget session, the speech of the finance minister got completed around 1 p.m. and in another 3 hours time, we have been able to have this session with an excellent panel of speakers. We from Zentax Clinic, the entire team, thank the expert panel for having thrown their insights. So this has been the brand identity of Zentax Clinic, where we have been providing solutions on GST litigation. So Zentax Clinic has been a core providing services exclusively on GST litigation. And from today, from this minute, we have a very different brand identity. From this logo of Zentax Clinic, we change our identity into the evolving game changer, to say that we would be evolving a lot on artificial intelligence. We have already tied up with an edtech partner, a leading player in the artificial intelligence space, to develop our fintech platform into or embed with lots of artificial intelligence features. So at present, Zentax Clinic provides an platform wherein the notice tracking can be made effortlessly through a single dashboard. So Zentax Clinic has been the first platform to provide that completely free of cost, and we provide effective solutions for GST litigation on a pan-India level. So to move on with the discussion for today, under this new brand identity with this new logo. So effects on you, the Union Budget 2025 and the GST updates. So I will take you through the Union Budget 2025, particularly with respect to the direct tax proposals. So on the income tax updates, this has been a very fascinating budget for the entire tax-paying community. The entire income tax community has been thrilled with the announcement made as part of the direct tax proposals, which particularly the individual taxpayers. This has been very much touched upon by all the earlier speakers, and now to put it on the slide, and so that we understand the actual impact of it. Here we see what was the income tax rate for the financial year 24-25. That is the current financial year. What is the current income tax rate and how it is going to change for the financial year 25-26. So one of the basic and fundamental aspect that has changed phenomenally is the mindset. How much is tax on my income? So basically, before this new regime of income tax came into effect, the general mindset was, if my income is above rupees 10 lakhs, I am taxed at the rate of 30%, right? But now altogether, the shift goes to say that only if your income is above rupees 24 lakhs, you would be taxed at the highest tax slab of 30%. So until 24 lakhs, no one needs to be worried about the tax slab of 30%. Then, so what is this slab structure goes to say? Up to 4 lakh rupees, there is not going to be any tax rate. In the previous budget, they had given up to 3 lakhs. There was no tax slab. There was no tax. Now it is up to 4 lakhs. Then every incrementally for every 4 lakhs. From 4 lakhs to 8 lakhs, it is 5. From 8 lakhs to 12 lakhs, it is 10%. 12 lakhs to 16 lakhs, it is 15%. 16 lakhs to 20 lakhs, it is 20%. Then we have a new rate of 25%, which was missing in the previous tax slabs. In the previous tax slabs, we did not have the tax slab of 25% at all. Now in the tax slab, in the earning gap between 20 lakhs to 24 lakhs, the tax rate is going to be at the rate of 25%. 20 lakhs to 24 lakhs, it is going to be 25%. Above 24 lakhs only, it is going to be 30%. And above 50 lakhs, you have the surcharge as was applicable earlier. So this has been a phenomenal game changer. But a very common man question is that, sir, there has been a speculation on the social media, and I personally heard from the mouth of the finance minister stating up to 12 lakhs, there is no income tax for an individual. But here I see on the slide on the orange color that up to only 4 lakhs is nil. So then what is the reality? Is there a basic exemption up to rupees 12 lakhs? The answer is a straightforward no. The basic exemption under income tax for income tax compliances, filing of income tax return is all up to rupees only 4 lakhs. But what is that threshold limit of 12 lakhs which the finance minister commanded and the social media proclaims that there is no income tax up to an income of rupees 12 lakhs? Here we have the rebate under section 87A of the Income Tax Act. As it exists today, we have the Income Tax Act 1961, which provided a rebate of up to rupees 25,000 for individual income tax payers having an income up to rupees 7 lakhs. Now, this rebate has been extended, has been revised to say that rebate will be eligible for all individual taxpayers up to an income of rupees 12 lakhs, and the rebate amount would be 60,000. That is, if you calculate under the revised tax slab, for an income of rupees 12 lakhs, the income tax payable would be rupees 60,000. The entire rupees 60,000 is eligible as a rebate under section 87A. And therefore, what the finance minister commanded during the course of the finance minister's speech, and also very well circulated on the social media, is that the net impact for a person who has an income up to rupees 12 lakhs will be nil. But whereas the tax slab is as already shown in the slide. If suppose a person has an income to the extent of rupees 15 lakhs, then the tax slab would be normally applicable. No rebate would be applicable. But whereas if at all the tax slab is up, if the income of the individual is up to rupees 12 lakhs, then the rebate would be applicable, making the tax to be nil. Rationalization of TDS rates. So certain aspects of the rationalization was explained by the finance minister during the finance minister's speech, and certain aspects were not explained, and that is why we detailed this session as heard and not heard in the budget speech. Sometimes the not heard portion is against the taxpayer and not a benefit. But over here, all the provisions have been relaxation on the TDS threshold limits. There has not been any change in the TDS rate, but the threshold limit have been revised for multiple entries. Talking about it from the first entry with respect to interest on securities. So there was, with respect to securities, there is two sections. One, interest other than interest on securities, interest on securities. So with respect to interest on securities, like say debentures, there was no threshold limit, and even if a sum of rupees 1,000 was paid, there was the requirement of a mandatory TDS deduction. Now the threshold limit has been provided at rupees 10,000. With respect to dividend payment to an individual shareholder, even if the dividend was paid to an extent of rupees 5,000, TDS was required to be deducted. Now the threshold limit has been doubled, making that TDS deduction threshold to rupees 10,000. With respect to winnings from lottery, crossword puzzle, or a horse race, the previous provision contained that the aggregate of the amount, if it exceeded rupees 10,000 during the finance year, TDS had to be deducted. But now making it more simpler for the deductor, if for a single transaction, the amount paid as a winning from lottery, crossword puzzle, or any of similar transaction, or from a horse race, for that specific transaction, if it exceeds rupees 10,000, then TDS has to be deducted at the rate of 30%. If suppose the winning is only rupees 5,000, then there will not be any tax deduction. Even if the winning is rupees 5,000 across 10 different transactions, there will not be any requirement of a TDS deduction. From a business perspective, these three transactions have a very profound impact. Payment of commission or brokerage. Previously, the threshold limit was 15,000. Gradually, it has been enhanced over the various years. Previously, it was 5,000. Last, it was 15,000. Now, it is being enhanced to 20,000. Thankfully, the TDS rate for commission or brokerage is also pegged at a lower rate of 2%. With respect to rent, the requirement of TDS deduction was given on a per annum basis to say if the rent paid or payable during the year will be in excess of rupees 2,40,000 rupees, then TDS was required to be deducted at the rate of 10%. Now, a relaxation has been made with respect to the monetary limit and also the manner in which the amount has to be looked into. Now, a more reasonable clarity has been settled to say that if the rent payment is in excess of rupees 50,000 per month or for part of the month, then TDS has to be deducted at the rate of 10%. So this gets it aligned along with section 194 IB also, where as well the amount has been quantified on a per month basis instead of on a per annum basis. So, or to simply say, on a very macro perspective, if up to rupees 6 lakh of rental expenditure, you need not deduct TDS under the income tax provisions. Fee for professional or technical service under section 194J, the TDS limit was rupees 30,000. Now it is proposed to be increased to rupees 50,000 at the rate of 10%. This was also explained by our mentor and chief advisor as part of his elaboration, and also by the previous speakers on the much needed clarity with respect to the TDS or TCS on the purchase of goods. Before the introduction of section 194Q or the legal provision under TCS 206C1H, there was no TDS deduction with respect to goods. It was generally restricted to an activity of service under a contract, rent, professional services, or any of these similar transactions. But the introduction of section 194Q, though at a very nominal rate, had a very profound impact on the entire business transactions, because the substantial amount of transactions were the procurement of goods for which TDS was introduced. Not just the TDS was introduced, TCS was also introduced. So to say that primarily on the purchase of goods, when the value of aggregate purchases in a financial year exceeds rupees 50 lakhs, tax has to be deducted under section 194Q. The condition was that the buyer turnover has to be in excess of rupees 10 crores for him to be liable to follow this statutory requirement. Corollary to this, we also had the legal provision under section 206C within bracket 1H, which went on to say if the buyer is not liable to deduct tax at source, then the seller who has a turnover in excess of rupees 10 crores has to collect TCS at the rate of 0.1%, though the monetary limit was, though the rate of TCS was low and even the rate of TDS was also low. This was a huge compliance burden. Will my buyer deduct TDS was my question. I need to know before raising my invoice. Only then I need to raise an invoice with TCS. So now this finance bill 2025 has proposed the removal of this TCS requirement completely. And therefore, as a buyer, if I am required to deduct TDS, I will deduct TDS. If not, the matter ends. We will now just elaborate this important provision with multivarious scenarios. In scenario 1, where the buyer has a turnover in excess of rupees 10 crores, the seller also has a turnover in excess of rupees 10 crores. To which turnover, to which year do I have to look into when I am looking at the TDS requirement for the financial 25-26? For the year 24-25, I have already decided whether I should deduct TDS or whether I should collect TCS. Now it is already, we are in the fag end of the financial year, only 2 months to go by. So when I am talking about the financial 25-26, I need to look into the turnover of the preceding year turnover, which is the turnover of financial 24-25. So let us assume for the financial 25-26, the turnover of the buyer is in excess of rupees 10 crores and its turnover of the seller is also in excess of rupees 10 crores. In such situation, the buyer will deduct TDS at the rate of 0.1%. Even before the amendment, the buyer will deduct TDS. Even after the amendment, the buyer will deduct TDS. If another situation where the buyer's turnover is in excess of rupees 10 crores, the turnover of the seller is less than rupees 10 crores. In such a situation also, the buyer will continue to deduct TDS even before the amendment and also the amendment through the Union or the Finance Bill 2025. The change comes where the turnover of the buyer is less than rupees 10 crores, but the turnover of the seller is more than rupees 10 crores. Before the amendment, the provision contained that since the buyer is not liable to deduct TDS, but the seller having a turnover in excess of rupees 10 crores was required to collect tax at source at the rate of 0.1%. Now this has been relaxed through the Finance Bill 2025, which goes on to say that TCS provisions under 2061H will not be applicable and therefore the seller will not be required to collect TCS in this situation. In a situation where the buyer and the seller turnover is in less than rupees 10 crores, no TDS under section 194Q, no TCS under section 2061H. Even before the amendment and also after the amendment, the provision stands status quo. So the substantial benefit is for those sellers who have been buying from suppliers having turnover less than rupees 10 crores, where they had to collect TCS also. Now that provision is proposed to be amended through the Finance Bill 2025. Next aspect was also highlighted by Rangaraj sir during his explanation when he explained about this concept of specified person. So the provisions of TDS as well as TCS contained that this is the specified rate at which TDS has to be deducted, or this is the specified rate at which TCS has to be collected. But whereas if the deductee, or in case where the person from whom the tax has to be collected is a specified person, that is until the financial 24-25, a person who does not have a PAN number or a person having a PAN number has not filed his income tax return. So when you are deducting TDS, you need to know whether the deductee has a valid PAN. Number two, whether he is regularly filing his income tax return. If both these conditions are satisfied, then the normal rate will be applicable. If he is not filing his return regularly, then TDS has to be deducted at the higher rate, or even with respect to TCS, it had to be collected at the higher rate. This was often a problem because you need to cross-check for all the deductees, and also in multiple situations, TDS notices have been issued immediately, as our mentor and chief advisor was also mentioning. Immediately after filing your TDS return, on the next day you will get a TDS notice to say that these persons are specified persons and therefore there is a short deduction or a short collection of tax. Gone are these days from 1/4/2025. Once this finance bill becomes a finance act and these provisions are getting notified, this higher deduction is applicable only in a situation where the deductee or the person from whom tax is being collected does not have a PAN number. So where he does not have a PAN number, the matter is very simple. When filing the TDS return itself, you put it at the higher rate. So no more checking whether he is a regular filer or a non-filer. A couple of amendments relating to trusts, and one of the important amendment proposed is with respect to smaller trusts where trusts were given registration for a maximum period of 5 years. Now, when the trust or the institution is having an income less than rupees 5 crores in the last 2 years, then the registration can be granted for a maximum of 10 years. So, renewal after a 5-year tenure is not required. Renewal can be required only after a 10-year tenure. So, the registration, this will not apply for the registration which has already been given. For the next registration or renewal, when you go for, if you are able to satisfy the assessing officer that you are a small trust, that is less than 5 crores, then you may be granted a registration for a maximum up to a period of 10 years. Then there have been some small relaxations to say where the application of registration is not complete, then also you might lose the entire registration, registration for a trust under the income tax provision. So all those smaller provisions are also being done away with, and benefits are there for the trust with respect to the income tax amendments. Then there's also a concept called as the updated return under the income tax provisions. An updated return is a return which is filed after the due date for filing a revised return also. The income tax return has a due date within which you need to file the return, and there is an extended period within which you can file even a revised return, and after which, if the return is filed, in addition to the interest that may be applicable under 234A, B, C, in addition to the late fee that may be applicable, the tax rate itself is an additional amount. So hitherto, the government had provided that if after the due date of return, say for example, the return had to be filed before 31st of December. For the financial year 23-24, any income tax return had to be filed before 31st of December 2024. So when a return is being filed after 31st of December, within a period of 12 months, that is during the calendar year 2025, the additional tax rate was 25%. The next period of next 12 months, then the additional tax rate was 50%. Now they have extended this time limit for filing a return even beyond this 24 months to say the return can be filed even up to 48 months from the end of the assessment year, where if it is filed between 24 months to 36 months, then it is at 60%. If it is filed between 36 months to 48 months, then it is going to be 70% additional tax rate itself. Not the tax rate, but if the tax is going to be 100, here it would be plus 70% of it, right? So it is not going to be 70% tax rate. So whatever is the tax rate will be multiplied into 1.7 times. So our first speaker and our chief guest of the session, also a special guest, Shanmu Sundaram sir, highlighted from a micro, small and medium enterprises perspective about this increase for the MSME classification criteria, where the investment criteria has been made 2.5 times for each of these categories, and the turnover criteria has doubled for each of these categories. What does this benefit of MSME classification has with respect to the income tax provisions? I'm sure most of us here understand that we have a specific provision under the income tax which talks about timely payment to micro and small enterprises, and if it is not made, then it would attract a disallowance under the provisions of the Income Tax Act. So this timely payment hitherto could be enforced only under the erstwhile investment and turnover limits. But after this relaxation, after the enhancement of the MSME criteria, even this payment terms for the industry as a whole, MSME industry, would get improvised. So these are some of the very key and important amendments relating to the direct tax proposals. Now we move on to one of the most important aspects of the budget aspects relating to the GST updates. Certain aspects which have been part of the union budget, but certain aspects which have been very recent amendments, but which have a very important impact for the trade and the industry as a whole. To present this, we have our mentor and chief advisor, CAP Paul Thangam, a veteran in the entire indirect tax regime, who will take us through this indirect updates on GST from a very simplified perspective. Over to you, please.
Good evening to all. Now only the weekly webinar session starts. Weekly webinar, this is 58th edition. 59th edition, sorry. 59th edition of Zentax Talks. Okay. So happy to be part of the these talks. See, you might have seen or you might have heard the speech of the finance minister. Okay. If I remember, the para number is 136. I shall deal with the personal income tax at the end. So just like a thriller movie, she kept that as a suspense, and then she at last only released, okay, well, this is the personal income taxation. That is from 7 lakhs to 12 lakhs, there will not be an income tax. So just like Dhoni's last ball 6, she completed with a sixer, I would say, that the personal income taxation. She specifically mentions in paragraph 136 that she will deal with the personal income taxation at the end, because up to them, he wanted to keep them gripping and then anticipating. So in similar manner, this week's Zentax, we will be, or I will be dealing with the amendments made to the CGST Act at the end. So first we will see some of the other amendments that came prior to this finance bill, and then what are the amendments made through finance bill. These are very, very important amendments that have been made, though that has not been a part of the budget speech, but from the practical aspect, these amendments are very much essential for the trade and industry. So as mentioned by the finance minister, I shall keep the amendments made to the CGST Act by the finance bill at the end. Start with the other provisions that have been amended. The first one is waiver of late fee for 9 and then 9C, not a 9 and C, only for 9C. See, every person who is registered, okay, he has to file an annual return. As per the section, if you go by the section, you have to file annual return irrespective of the turnover. But every year, government gives a notification and then exempts a person who has got the turnover up to an aggregate turnover of annual turnover of rupees 2 crores. So he is not burdened with the filing of the annual return. Others, they have to file an annual return. And also, there is a requirement for the person who have got a turnover, aggregate annual turnover more than 5 crores to file a form or file a reconciliation statement in 9C. See, in most of the cases, the registered person filed the GSTR 9 within the due date. The due date, the normal due date is 31st December. They filed within the due date, but there was a delay in filing the GST or 9C or reconciliation statement. So there was a dispute between the department and then a registered person, whether late fee will come for 9C or not. So that was the question. So the registered person went to the court against this levy. So they told, see, the late fee is coming only for returns. See, because the word section 44, which enables levying of the late fee, uses the word return. But 9C, they used to call it as a reconciliation statement. So what is the purpose of the reconciliation statement? You have to reconcile the turnover, annual turnover declared in GSTR 9 with the turnover declared in your financial statements. So that is the criteria for GSTR 9 and 9C. So up to a period, there was a 2011, there was a requirement, 2021, there was a requirement that it should be certified by a chartered accountant or a cost accountant. After that, a self-certification is enough. So the assessee or the registered person contended that there is not be any late fee because it is not a return. So matter went to the court also. Even Kerala High Court, they decided in favor of the registered person that late fee is not leviable for GSTR 9C. In this background, the CBI, Central Board of Indirect Tax and Customs, has given a circular. This is the latest circular, that is 30th January. Okay, therefore yesterday. What they say is GSTR 9 and then 9C combined only constitutes the full and complete return. So, if both are combined only, you have validly complied with the provisions of filing the annual return. But without this reconciliation statement, it is incomplete. So, that is the view of the CBAC as per this circular. So, as per this circular, you have to pay late fee if there is a delay in filing GSTR 9C. So, that is the simple. So, as per the circular, they have emphasized the need for filing the GSTR 9C also within the due date. So, this is the thing that we have to take it forward. Now, the question comes, should there be a separate fee for GSTR 9 and then 9C? See, assume there is a your due date is 31st December, and then you file the GSTR and 9C simultaneously after a period of 30 days. Then should there be a late fee? One late fee for GSTR 9 and then one late fee for 9C. That is very much in favor of the registered person or assessee, I would call, that there will be only a single late fee, not separate late fee for GSTR 9 and then GSTR 9C. So, to that extent, there is a mitigation, because some of the officers were taking the view, suppose you are filing it after 30 days 9, after another 30 days, you are filing GSTR 9C. So, the first 30 days, they were levying late fee for GSTR 9, then for 9C, 60 days, they were levying GSTR late fee. So, in that situation, now the circular makes it clear, there will be only one penalty, and then that penalty will be calculated up to the date of filing the GSTR 9C. Even though you have filed the GSTR 9 within the due date, it will be extended to GSTR 9 date. Up to that date, there will be GST late fee will be charged. But thankfully, there was a circular, there was a notification that gave waiver for the late fees for the period from 2017-18 to 2022-23. That was a waiver given for the late fees for 9C alone, but not for 9. Okay. So, if there is a delay in filing the 9, you will be levied 9 late fee, but for the delay in filing 9C only, there is a waiver. But this is subject to the condition the 9C should be filed before 31st March 2025 if you are not filed it till now. So, but it presumes that you have filed the GSTR 9 in the correct time. If you are not filed GSTR 9 in the correct time, so up to the date of filing the GSTR 9, you will be levied late fees, and then after that, if you file GSTR 9C within the time of 31st March 2025, you will not be levied of any late fees. So, you have to be very, very careful in filing the GSTR 9C also within the due date. Now, you will be aware of the fact, most of the big corporates, okay, they face this problem on the 31st December 2024. So, at that time, there was the companies were not able to generate e-invoice, or they are not able to generate e-way bill. So, with that, the goods cannot be moved. All those things were there. I used to mockingly say, see, you cannot make a mistake. as a registered taxable person, you cannot make a mistake. If you make a mistake, you will be levied a late fee or penalty, interest, all those things. But if there was a system error or there was a portal error, there are nearly 1 crore 25 lakhs person registered in the GST, and then they are going to get affected. How much penalty has to be levied for not providing the valuable service, or if there is any deficiency in service, the GST should be accounted. There should be penalty for them not providing the services to the nearly 1 crore and 25 lakhs associate registered persons. So, but now as a via media, now they come up, they say these are all existing. Now they say you use it as a backup measures. You backup measures. They say there are for e-invoice registration, there are 6 portals are available. So they ask us to register on these portals. As a backup measure, they ask us to register in this portal. So they say you have to, the registered person, they have to talk to their system integrators. They are maybe ERP providers or GSP providers or everyone. They have to be intimated, and then they have to link it to, if you are linked to one system, that is NIC e-invoice 1, they ask as a backup, you can invoice with the EOI ERP. So you can register with e-invoice 5 GST.gov, and that could be a business continuity. That could be business continuity. So to cover up their deficiency, they introduce, or there is a redundancy, they say. So as a backup, in case of the whenever we are taking backup, there will be mirroring site or anything like that. So just like that, as a backup measure, the advisory is given. GST is giving an advisory that you have to register with these portals so that your business continuity is not affected in any way. So even though their system is not working, they are not going to, because this time they gave an extension for 1 day, and then if at all there was a blockage, or if the consignment could not move within the stipulated time, they say it can be moved without e-way bill also. So to avoid that type of problems, they have advised us to register through the system integrators for all the other portals, so that there will not be any discontinuity in your operation whenever there is a face problem in your regular portal where you are registered for generation of the e-invoice or e-invoice number. Okay, so this is one of the advisory given by the GST. Now there is a temporary identification number. See, now you will be aware of the fact that is detention of the consignment has become an order of the day. Okay, wherever there is a small mistakes are there, even where which government is there, wherever that is, it may be happening in Karnataka or it may be in Uttar Pradesh. You are sending the goods from here to Delhi. On the way in Uttar Pradesh, your consignment will be getting intercepted, and then it will be held back. But you will not be having a registration in Uttar Pradesh. So what to do? So now there is a specific provision has been inserted that it enables the officer who detained the goods to generate a temporary registration number. Already they generate a temporary registration number, and then on the basis only you make the payment, so that your consignment gets moves out of the that state. So for this, now they have given a specific form, and then within part B, that proper officer will be allotting you the number whenever goods are detained. So for this purpose, yes, new rule has been introduced. So through this temporary identification number, you can file appeal also. So that will make the easy for filing the appeal. So this is a new rule that has been inserted recently for this purpose. GST registration in Tamil Nadu. Okay. See, now getting the registration is a very, very tough job. Getting registration, immediately if you apply, you will get rejected. Then there will be query and everything. So for this purpose, some more barriers are placed in the GST registration. Okay. Actually, they should welcome us. Now they send a welcome letter and everything, but if the letter is not delivered, that is also creating a problem. But they have got a welcome letter. In spite of that, there are so many issues are there in registration. One more problem or one more new method of registration problem has come in the form of biometric based Aadhaar authentication. So this is a procedure that has been introduced from 28th January. So this is a new system that has been introduced. So whenever a person is coming to set up a unit, he is going to give the amount to the government, but the government is not bothered. They want to verify the authenticity of the person. For this, on the basis of the data provided by you, so they analyze your data risk parameters for the assessee. For suppose you are giving a details of the directors, so the system will verify the directors' details. If the directors are defaulters in some other company, naturally they will be classified as risky. They do not use the word risky, but they say on the basis of the risk parameters or data analytics. So on that basis only, this biometric Aadhaar authentication has to be taken. So if the application, if the system identifies you as a risky, then you have to go through the biometric Aadhaar authentication. So this may not be useful, but if a person is setting up a branch, then it will be very, very difficult here. So how this biometric Aadhaar based system works? Okay. So as soon as you file the GST or REG1, that is application for registration, it sometimes, if there is no risk is involved, the OTP Aadhaar authentication will come. So on that basis, you can find the other details and then you can seek the registration. If the system identifies as you on the basis of data analysis a risky person, then naturally you will be getting a link. You will be getting a link. Okay. And with a message to visit the GST Suvidha Kendra. Suvidha Kendra is nothing but a help centers. Suvidha Kendra. So they will be giving the details of the GST Suvidha Kendra where you have to visit and then jurisdiction for biometric Aadhaar authentication and then document verification. So immediately, only after completing these formalities, you will be given the GST registration. So once you receive the link, what you have to do? Once you receive the link, you have to get the appointment for your visit with the GST Suvidha Kendra. So the Suvidha Kendra, you have to visit and then there you have to go through the verification. So there they will be taking your verification, maybe fingerprint, iris scanner, everything will be taken. Then after that only you will be given. So at that time, you have to give that Aadhaar and PAN card original copies. You have to show them Aadhaar because you are uploading only the copies. Now you have to produce the Aadhaar and then original to the Suvidha Kendra authorities and also other document. If there is a lease agreement, that also has to be taken in original, and also the utility bills as evidence you keep. All those things have to be taken, and then only after verification you will be given the registration. So this is a new procedure that has come into force in Tamil Nadu. So for registration, these formalities have to be taken only if you are identified as a risky person. So this is one aspect of the latest changes that have come into the GST. Now comes, as our finance minister mentioned, he will come last to the personal income tax, the finance bill amendments. Finance bill amendments, I am going to deal with regard to the GST. Finance bill amendments. Arvind talked about the income tax amendments. I am going to talk about the amendments made in the GST provisions. First one is Supreme. Already this is a known fact because in the GST Council, after the GST Council meeting itself, they told that amendments will be brought down to nullify the decisions in the case of safari retreats. See, what is the safari retreats? So safari retreats, whether ITC can be claimed for the building, that is the crux. See, the safari was constructing a mall. For that, it had accumulated ITC. So the question arises whether the mall can be considered as a plant or anything. So the matter went to Supreme Court. If it is a plant or machinery, Supreme Court did not express an opinion, but it sent the matter to gave so many guidance, and then she returned the matter to the bench, High Court bench, Orissa High Court bench, to see whether this immovable property can be considered as a plant or machinery. This was the direction given by the Supreme Court. See, the whole controversy. Why this controversy? Because in CGST Act, there is a definition for plant and machinery. There is a definition for plant and machinery. But in this section 17(5)(d), which refuses the ITC benefit, gives an exception for plant or machinery. So if the immovable property is a plant or machinery, it is eligible for ITC. So in short, so the question before the Supreme Court is whether the plant and machinery definition as contained in section 17 will be same as the plant or machinery. Supreme Court at length discussed about the words and are. So it meant the words plant or machinery is not same as the plant and machinery defined. But the government at that point itself argued that was only a printing error, everything. But the Supreme Court told if it is a printing error, the government would not have allowed for 7 years to come into this position. So it told the plant or machinery is different, and then plant and machinery is only the same. But now, with retrospective effect from 1st July 2017, the clarification or the amendment has come into place. They have substituted the word plant or machinery with the words plant and machinery. So the definition aligns with the usage of the word in section 17(5)(d). So in short, you cannot claim building depreciation by considering it as a plant or machinery. So the entire decision by the Supreme Court is coming into the now. That is a thing very, very important. In my opinion, see, at the time of the question or the opinion, the dispute came from the Orissa High Court. At the time of dispute itself, the government knows that there is a issue involved. That time itself, they could have corrected it. Instead of taking the matter to the Supreme Court, they could have made the correction. If they had done it, they would not have spent so much of time of the Supreme Court. Supreme Court might have taken so much of time for giving that judgment. That time could have been avoided, in my opinion. So the judgment is no longer valid. So scope of input service there. So input service distributor, it has become mandatory. It was made mandatory by the Finance Act 2024, not the abridged version. So before the election, this was presented. So we can call it as an interim budget. So in that they changed the substituted the definition of input service distributor. So due to this substitution, the concept of input service distribution becomes mandatory for any person who has got more than one registration. Okay. So if there are more than one registration, if the person receives a service for more than one registration, then the ITC has to be distributed only through the input service distribution mechanism. So this provision comes into effect from 1/4/2025. So now itself, I advise all the corporate having more than one GST to opt for this IST mechanism, or IST registration has to be taken separately, get registered. So this is very, very important. So this is the thing that has come, that is concretized. Oh, IST become mandatory. Now what is the change? So in the earlier definition, it did not have the inclusion for the interstate reverse charge mechanism. So reverse charge mechanism, the recipient has to pay the tax. So there is a definition for reverse charge. So the definition of the input service distributor included only the reverse charge for CGST Act and SGST Act, but it never covered the interstate reverse charge. So if there is any reverse charge for so many services, then there is an opinion this input service distribution will fail. So it is not necessary to distribute this. So that was the idea. See, for example, a company is having a business at Kerala and also in Tamil Nadu. They have got an auditor at Mumbai. So he is registering bill. Suppose they have got only an office at Mumbai. There's no business. So it is unregistered. So they have to pay reverse charge for the rental purposes. Rental. So this reverse charge need not be paid because there is no mechanism. So all those things were there. Now they have substituted that definition, or they have introduced that reverse charge, interstate reverse charge also will be covered under the definition of input service distributor. So that also will be covered in the future. So reduction in liability, tax liability of credit notes. Okay. So section 15 deals with the value of taxable supply. So value is normally, it is a transaction value unless they are related persons or anything. The transaction value only has to be adopted for the purpose of determining the tax rates. So this section 15, particularly subsection 3, mainly dealt with the discounts, post-supply discounts. See, post-supply discount. Suppose, say, our Rangarajan sir is there. So if the dealer takes so much of quantity in a year, they will be given a credit note. So those credit notes can be reduced from the earlier taxable value we gave. So, but this is subject to the condition. So there is a discount established in terms of the agreement into or before the time of supply. So before the time of supply, there should be an agreement, and then it should be linked to the invoices. Another condition is the recipient should reverse the ITC. The recipient should reverse the ITC. So in this aspect also, how to ascertain the recipient has reversed the ITC? For that also they have given a circular. So up to 5 lakhs, the recipient himself can say, I have reversed, or more than that, they can get a certificate from the chartered accountant that they have reversed. So this reversal was confined only to the discount portion. But as you will be aware of the fact, the credit note is covered by section 34 of the CGST Act. So 34 of the CGST Act. So what section 34 says? So section 34 says credit note can be issued in these 3 situations. See, whenever you are charged a higher rate, see, for the product rate is 5,000, by mistakenly you are charged 6,000. So in that situation, you can give a credit note. Okay, and there is a sales return. You have sent 100 pieces. So in that they found 20 pieces are defective. So they return it. So in that situation, you can give a credit note. And then goods are sufficient or services rendered as deficient. So in this situation, they can give a credit note. So whenever the credit note is given, your effective taxable value will get reduced. But though it is in a subsequent period, it will get reduced. Now, till now, there is no provision. That the recipient should reverse the ITC. So this is one of the important aspects. Because section 15 had a provision for reversal only for the discount component, but there is no equivalent provision whenever the goods are returned that the recipient should reverse the ITC. Now, a new clause has been introduced to provide that you can reduce your output tax liability only when the recipient has reversed the ITC. So this is one of the amendment that has been carried out. So this is the one more provision. Input attributable searching, if availed, has not been reversed. You cannot reduce if he has not reversed the ITC. So this is an aspect that has to be taken care. But I feel, so the question may arise from the trade in the industry. How will I know whether he has reversed or not? But in the future, IMS is going to come into place, invoice management system. So whenever you are putting a credit note, naturally it will go to the recipients 2B. So the recipient cannot reject the ITC, the credit note. Why? Because if he is going to reject the credit note, effectively means he is not reducing his ITC. So the option to keep the credit note pending or reject is not available. Naturally, he has to reduce this value of supply. So there will be a link between IMS, and through that, the supplier will know what are the actions taken by the recipient. So such a mechanism will be useful in the future. So this is a new condition. If there is a sales return, unless the recipient has reversed his ITC, you will not be eligible to reverse your output or reduce your output tax liability. Then track and trace mechanism. So track and trace mechanism. So thank God it is not for all the goods. This is only for the goods that are going to be notified by the government in future. So from my opinion, these are the provision that will come into play only for the items that the government considers as evasion prone. Even earlier in the TN VAT Act also we had some provision for the evasion prone commodities. Even they are crossing the state of Tamil Nadu, then they have to get a pass at the first point and then they have to produce at the last exit point. These are all the conditions. For example, marbles. Why that provision was there? Because government felt, so the goods will enter into Tamil Nadu, they will not pay any tax, they will unload it. They will say it is, suppose the goods are coming from Bangalore, granite blocks are coming from from Bangalore, and then it will be billed as it is going to Kerala. But actually the material will not go to Kerala, it will be unloaded in Tamil Nadu itself. To avoid that, there was a provision in Tamil Nadu VAT Act. So in similar manner, the evasion prone commodities, government say there has to be tracking and then trace mechanism. So what are the obligations? See, in my opinion, this may come for, from the details, my opinion, this may come for pan masala. So because the rate of tax is nearly 200% there. So that is cess. So that may come only for pan masala. Because for pan masala only, they have to furnish the details of installed capacity of machineries. Though the tax is not based, but they have to give the installed capacity. So, and also they have to mention the goods, what is the lot number, everything. What are the contents that has to be mentioned or affixed on the packages also will be given by the government. All those details has to be given in the packages. So then only they can trace the consignment. For this purpose only, this new provision has been introduced. In my opinion, the others need not be worried. Only the evasion prone commodities may be scrap, and steel scrap. It is also one of the evasion prone item that may come into effect. Other things will not come into effect. This is my opinion. Then the concept of vouchers. See, the concept of vouchers is a favorite question for this CA examiners. For the CA exams, they will have a question on these vouchers. So this concept of vouchers, already they are given a circular. These vouchers will not be liable for tax. See, what is this vouchers? This is a definition. You need not go through this entire definition. So I can tell the example here in Coimbatore. Krishna Sweets is famous for Mysore Pak. So for Diwali, most of the corporates buy the Mysore Pak and then give it to their customers or their friends or their staff or anybody. So, but in some situation, instead of giving the Mysore Pak, suppose you are going to give to your customers, he is having sweets from nearly 10 meters. So they cannot use it, they cannot consume it. So they give what they give, some of the corporates, they go and buy the vouchers. So the vouchers may be the denomination of 500 rupees. They will make, so 500 rupees payment. So for example, for 10 packets, so 5,000 rupees they will give to the Krishna Sweet and then they will hand it over to their customers. So the customers can go and then buy the goods whenever they want it. So the question arises, what is the rate of tax and then when it has to be paid? So that's all there. So they told if the identification, the goods are identified at the time of purchase itself, so that time you have to pay. For example, for the sweets, rate of tax is 5%. If you say you can buy only the vouchers, the Mysore Pak, at the time itself, they have to charge and then take. But if they say 500 rupees, they can use it for sweets or for savories, because savories attract 12%. So only when the buyer comes with the vouchers, they will know what is the exact amount that they are going to pay. And at the time, now this concept of vouchers have been given. Now there's no tax liability at the time the person or the big corporates buy these vouchers from the Krishna Sweets or anybody. So there is no tax implication. To that extent, amendments have been made. So pre-deposit. So only when there is a disputed tax penalty, you have to pay only 10% of the tax amount. Now the question arose, what should we do when there is a penalty? Only there is an order levying penalty. You are disputing that penalty. Should there be any pre-deposit? As of now, there is no pre-deposit. In future, whenever you are going to make we are going to file an appeal before the commissioner, you have to pay 10% of the penalty. If you are going to pay, go to the tribunal, you have to pay additional 10%. Schedule 3 amendment. See, these are all transactions which shall be treated neither as supply of goods or services. So one more item has been added, that is goods. SEZ can act as a warehouse. Now from the warehouse, when they are sending the goods for the exports or domestic tariff area, whether should they pay tax or not. So that was a question. Now it has been clarified. These are not the transaction which can be considered as a supply or supply of services or goods. இது வந்து supplying goods கிடையாது, service கிடையாது. So this will go out of the network of the GST itself. So there will not be any tax. So these are all some of the recent changes that have been brought up in the GST by the finance. So these are all changes that has been brought through the recent amendments, and also Finance Bill 2025. These are the amendments I thought we should share. And also the last one, suppose you have paid the tax prior to that, can you get the refund? They are very, very clear. See, in Tamil they used to say, யானை வாய்க்குள்ள போன கரும்பு வந்து திரும்பாது அப்படின்னு சொல்லிட்டு, whatever goes into the mouth of the elephant or the sugar cane that goes into the mouth of the elephant will not come out. So whatever the tax you paid, you will not get it as a refund. Thank you one and all for your participation. It was a great participation. So thank you one and all for.
So thanks to the expert panel of speakers for sharing your valuable time and your efforts towards compiling the budget documentation in such a short span of time. So your insights have been very valuable, and as well, thanks to our wonderful audience always who have been part of Zen Tax Talks for all the many sessions in the past, and also this special session on the union budget. So it is your active participation that has always made us to do more and more sessions. So stay tuned for more updates on GST. So we thank each one of you for your active participation, and we will take things forward.
Thank you, sir.
Thank you, sir. Thank you all. Thank you.
Thank you, sir.
Thank you, sir.
Yes, sir. Thank you, sir. Shami, sir. Thank you, sir.
Thank you.